Hey guys, welcome back to another week of Mortgage Matters in Minutes. Here again, obviously sponsored by Mortgage Specialists. I'm Brent Rasmussen, your host today. Thanks to Jonathan last week for filling in while I was out of the office. But this week is a piggyback from a couple weeks ago's show, and that we talked about pre-qualifications, pre-approvals, and loan commitments. And being that those are different topics and different items, we thought we would elaborate because we've gotten a lot of questions over the last couple weeks of what is a loan commitment in more detail, and will a loan commitment itself get me a home in this market? As we know, this market has been very crazy, very difficult for buyers to obtain property with multiple offers and many other variables that are going on. So we're going to talk about today specifically a loan commitment and how that impacts the offer possibly that you're putting in. So first of all, what is a loan commitment? So we talked about this a few weeks back, but we've talked about a pre-approval, a pre-qualification. A loan commitment is when we gather all of the items that are needed and we send that information to underwriter for them to review your credit, your income, and your assets. So in summary, it's a full underwriting approval, and that the underwriter is going to validate your work history, your W-2s, all of the items that are going to be needed to get approved for a loan normally. Through the years, we normally don't go through that process until after you receive a home. But to strengthen up your offer, many times doing a loan commitment will allow to show the seller that you are more ahead of the game, you're more serious, and that underwriting has reviewed your credit, income, and assets, and you're not going to have any problems with those items unless, heaven forbid, something monumentally changes. A few questions that came up is, does it cost anything? No, it doesn't. It's a normal process for all lenders to do. We submit your loan up as a to-be-determined property address, where we might not have a specific property address, so it carries forward with multiple properties or any property that you want to purchase, and generally it's good for 120 days, which is how old the credit report can be for the secondary market to accept that loan. The interest rate isn't locked, so the aspect of our questions that we get is, if we get underwriting back, can we lock in that interest rate and then go shop for homes? Unfortunately, you cannot, because a home lock or a rate lock is specific to the home itself. So we can't lock in interest rate, but the main key and main information that it gives the seller is it allows you to close faster. Because generally, if we get everything through underwriting, we can present that loan commitment to the seller to show the seller, hey, look, we've tackled all of these things on behalf of the buyer, and everything's looking very strong, and everything's already done and put together. So all we generally may need is for sure title work to make sure the seller is able to sell the property without any liens, encumbrments, any issues. And also then, if we do need an appraisal is needed. So at least it can speed up that process at the end, is that once your offer is accepted, the lender will be able to obviously close in possibly as little as 2 weeks. Because we've had everything else already done, all the verifications, all the paperwork, all the upfront that usually takes time for that 30 to 45 day closing. We've already knocked out that 2 to 4 week time frame by getting the underwriter to review and do all those aspects. So back to the original question at hand, will a loan commitment get me a house? Right now, the way the market is, I don't think a loan commitment just in itself will be able to do that. But if you're competing against 2 or 3 or 5 other people, and you are all offering the same price, you're all offering the same type of loan, conventional, and everything is apples to apples, by you having that loan commitment is one more stronger piece to the puzzle that the seller can feel more confident in accepting your offer. So I would always suggest to clients to move forward with a loan commitment. I think what we run into at Mortgage Specialists is many times customers believe that if they go through all of that work, that they're forced to take out a loan or something is negative at the end of that, but there isn't any. If you decide you don't need a loan, you went through that extra work, and that's all that's needed. So if you have the time, the energy, and you already are submitting the paperwork, you might as well go to the next hour or 2 hours to go to the next level and sign up the loan disclosures that are required by federal law and submit your loan to underwriting to get that loan commitment. And when you are presenting offers, as long as you feel comfortable, With that pre-approval, I would go ahead and submit that loan commitment with your offer to show, look, we have all these variables already taken care of, and I can guarantee you the seller is going to feel much more confident with your offer than someone else's. Hopefully you learned a little bit today about a loan commitment, what it means, how it can help you structure an offer a little bit better for your clients or for you as a borrower, either way. And we appreciate you spending a few minutes with us being educated this afternoon. Again, if you have any questions, we have lots of information on our website at mtg-specialist.com. You can phone call us at any time at 402-991-5153. And we look forward to speaking with you if you have any questions whatsoever. You all have a great day, and we'll talk soon.
Mortgage Specialists. Driven, trusted, reliable.